Hello traders, welcome to the 10 profit split of SGMMFX Copy Trading Program Season 1. I am SGMMFX admin, the founder and chief trader of this copy trading program, and I will be reporting the performance review for the 10 profit split this program. So I'm actually doing this, so it's actually now 21st October. I'm doing this in the morning because I just want to know over the weekend. Just don't have the mood to do this thing lah. Okay, so if you are new to this channel, this is your first time watching my video. We are doing a 1-year financial experiment. Where well, let me start sequentially lah. So if you look at the statistics for day trading, 90% will bust within, there's a statistics 90 90 90, so it says that 90% of traders will lose 90% of their money in the first 90 days. So we ask ourselves, how can we be part of the winning 10%? And this leads us to formulate the hypothesis that day trading is mostly a game of skill, and you don't need a gazillion dollars to actually do it. And in fact, it is something that is doable over the long term lah. So with a starting capital of 1K, we will trade this amount until we go bust or until we reach the 1 year mark, which is the 366 day. So I think we are almost a quarter in, almost 90 days in, probably in 1 or 2 weeks time. So there are three objectives to our experiment. First objective is we are looking to survive over 1 year and retain the value of this 1K. And in fact, we can actually cheat this experiment by not trading for the rest of the year, but I think it defeats the purpose. So our second objective is to generate profits every week. We are targeting 10%. Some weeks we meet, some weeks we don't. Okay, and our third objective is to maximize profits on our setups. I would say right now my performance is still very much mediocre, but the very happy thing is that we are almost, I think almost 70 days in. Yeah, around 70 days in, right? And I never had a losing day so far, which is quite shocking. So just to share our trading methodology, we don't gatekeep our knowledge, we don't gatekeep how we are trading. So our trading strategy is mean reversion. Simple Google search and you can find out what it really is. And our time frame is day trading. So our positions are open and closed within a period of 24 hours. The financial instruments that we settle on are the most actively traded. And if you look at financial assets, which are the most actively traded, they usually come with very low spreads. So their bid-ask spreads, right, can be as low as less than 1 pip. If you look at Euro USD. So what this means is that when we enter and close positions within a short period of time, a small percentage of our profits is actually lost to the commissions or the spreads. So we have settled on 5 major currency pairs and GJ. Commodities, we have gold and oil. Then indices, we focus on US30. And finally, for crypto, we focus on the top two, which is Bitcoin and Ethereum. So some of you may ask, why FX trading over futures and options? So in fact, I know one guy who is doing this options trading. You can search for him online. Singaporean options trader, Yang Mu Ming, I think, is doing this 100K retire challenge. But for us, we can actually do it at 1K. And it's possible because of two things. Number one, FX brokers offer extremely high leverage. 1 to 1,000. So this means that with $1,000, we can open up to $1 million worth of positions. And FX trading allows us to offer fractional loss as low as 0.01 lot, which is 1 micro lot. So this means that we can layer our trades over a very wide range of prices. So our progress so far, I think it's pretty decent. I'm almost so 10 profit splits. So I'm 10 weeks in and we're able to generate almost 180% of ROI, which is quite crazy lah. But we cannot compare to say Temasek Holdings lah because they don't have access to leverage and they cannot trade like trading pretty crazy lah. So in fact I even had drawdowns as high as 50% to 60%, which for Temasek Holdings they can't do that lah. Because after all it's our reserves lah. It's not something that you can fuck around with. So for our current week performance, I would say I was pretty near to the weekly returns of 10%. But I'm fine with it. For maximum drawdown, I almost hit the maximum drawdown of 20%. So this is within an acceptable range. For the profit to drawdown ratio, it was 0.48. So this is something that I need to look at. So my P to MD is less than 1. So this is how I grade my P to MD, which closely reflects the A-level grading system. But I added an A plus just to fine-tune it, make it more granular. So one of the trades that I took this week is gold. So this was a trade that I took on Friday. So on Friday morning, took a short set. I was expecting gold to hit like 2,700, 2,704, 2,705. I expect prices to retrace from there. So I chose to take maximum for this setup. And I did expect this setup to be a straightforward one, looking at the technicals. And I really wasn't expecting gold to go very crazy if it crosses 2,700. But what happened next is gold went up from the all-time high, it actually crashed through, peaking at 2,714 before retracing. So my entry wasn't so good, but my exit was almost perfect. So prices pulled back to 2,703, where I closed my positions, and I'm very happy to report that this setup gave me an 8% profit, even though I was wrong in my direction and my hypothesis. So some reflections is that my entry was totally crap, but my exit turned out to be perfect. And something to share about my trading system is that it's fairly forgiving if I make mistakes. So long as I am half correct, I will have I can still get out at a profit. So, but there's always room for improvement. So 2 points of improvement is that I could have been more patient with my setups, 1. And 2, I should have entered at a lower risk. So I could have been more aggressive later on. And even with considering the price action, it was unlikely for me to bust so because this was a pretty slow week. So I do not expect price action to be overly crazy. And a final point I want to make is that it's important to be in sync with the financial markets. And one way to be in sync with the financial markets is to study price action as much as possible. And if you are able to do that, trading actually becomes a very intuitive activity. At this stage, I'm mostly trading based on intuition, not so much on. I do engage in type 2 thinking post market hours, but during market hours, I'm mostly trading on intuition. So I've come to the end of my presentation. If you're interested to join, specific instructions can be found in my Telegram channel. And you can find the link to my Telegram channel in the video description below. And that's it. And I hope you have learned something today.